Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, August the 29th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get it on. And please remember the past performance of any trading system or methodology is not necessarily indicative of future results. All right, having all that out of the way, it looked like the markets were going to be down quite a lot today. As just about everybody knows, North Korea launched a missile over Japan, and the range was to kind of show that they could actually reach Guam. That caused a lot of turmoil, spiked the VIX, but then we started testing weapons in Nevada, and all of a sudden the market turned around and we got consumer confidence coming in at 122.9, was expected to be 120.9. So that is the second highest reading since 2000. So pretty big number there. The highest number, I should say, was just actually a couple of months ago. So consumer confidence at a decade high, if you will. Anyway, on to crude oil. You'd think with some of the flooding that's going on in Texas, it would have really caused crude oil to spike a little bit. But at the end of the day, we are down another 65 cents. And we are, at this point anyway, inside of that trend line that I was talking about for several weeks now. We broke out above it, now back in that trend area. Looks like this $45 a barrel mark is sure to be tested, which was about another dollar lower. Could easily come down and test the value area low, and even so that $42 a barrel mark as well. But with the economy kind of starting to pick up a little steam, consumer confidence being this high means that consumers might be willing to open up their pocketbooks and get out there and spend, which could cause the overall market to start picking up a little bit more steam, which would then make one believe that there is going to be more demand for crude oil for whether it's manufacturing and or just gasoline and things of that nature. So I don't know that the bulls are really in that much jeopardy at this point. So just to keep those other economic pictures in mind as well. Gold futures spiked, as you can see, basically off of this North Korean conflict, if you will. The market really rallied yesterday as there was a flight to safety, spiked again today. But again, consumer confidence being higher, the market's turning around. That's going to pull money out of gold futures. And at this point, settling below this 1322 area would really make this chart look like we are well overdone to the upside, and I'm going to be actually looking to add some shorts in gold after this chart setup here. So keep your eyes out for that as well. I haven't done anything yet, but I'm going to be looking to do that. On to the bonds. Bonds, again, flight to safety, they kind of spiked again, but then with the turnaround in the equities and things of that nature, some of the equities are still in negative territory, but it's not looking as scary as it did, last night and early this morning. But the bond's only up about 8 ticks right now and back inside the value area. So broke above that value area high again, and it looked like it's going to settle probably down below that at this point, especially with this turnaround in the equities. The VIX right here, you can see the VIX spiked off of that as well. I mean, you had about a blink of an eye to take advantage of VIX spiking, but VIX almost at the lows of the day. Here we go with the Dow Jones Industrial Average onto the equities, up 8 ticks on the day. And as you can see, it looks like it's a massive rally as they basically opened up negative or in negative territory in triple digits. This market has really turned around quite rapidly. We've got the NASDAQ up about 12 points, and as you can see, it looks like it's a huge rally in here, which it is. It just doesn't really necessarily look like it on the number aspect, only being up slightly. But with this big rally, again, we opened up and well into negative territory and have totally turned around. So NASDAQ in positive territory. E-mini S&Ps haven't made it over that hump into the green, but we are at the highs of the day. And as you can see, again, just a massive turnaround once we started bombing in the Nevada desert. Just a kind of a show of force, I guess, if you will, to North Korea that, Donald Trump probably isn't going to mess around. Anyway, here is the turnaround that we're looking at overnight, gapping lower off of the fear of North Korea. And then heading into the day set, or actually heading into today, overnight, market started giving back some of that as the shorts started covering. And then on the economic data points and things that I've spoken about several times, you can see it's been a unabated rally to these highs that we are very close to. I mean, we're just a couple of ticks away from the highs there. So market really turning around quite nicely, especially for the bulls. Apple is a trade that I covered today in my IRA. If you remember, I was able to get out of this naked short puts in my margin account. I kind of did a fat finger this morning and had a brain fart, if you will, on going to 50% of my max profit on this. And if you remember, I had on the September, and I was short the 157.5 puts, and then long the 150 puts or 155 puts in there. With this big rally today, I was able to get out close to 50% of my max profit. I originally sold it for 84 cents, bought it back for 47 cents. Yes, I should have bought that back for 42 cents. That would have been 50% of my max profit, but I don't know what happened there. I was putting it in. I thought I put it in at 42 cents. My eyes must be deceiving me, and I put it in at 47 and got filled immediately. And one thing that I always preach is put it in a little bit lower than you expect to get filled, because it costs you nothing to cancel replace. And as soon as I got filled on that order like that, I knew I had done something wrong and given up a bit of an edge. And obviously, I put that in where I didn't really necessarily want to. So it is what it is, and I'm out of Apple in both my IRA and in my margin account. Like I said, the only thing I'm really kind of looking to do right now is add a little bit of shorts in gold to my portfolio. I haven't done that yet, and just kind of watching the other ones. Everything's kind of turned around. My XLU, my XOP are starting to look a little bit better than they were earlier anyway. So pretty happy with that. All right, that's about all I got for you guys. Friday's webinar is going to be on the long straddle, you guys. And yes, the long straddle is the most simple strategy to put on, right? It is putting on the at the money strikes. But at the end of the day, you need to know when is the proper time to set this up, because there's all kinds of different environments in order to set this up. And I'm going to show you when and where to put on the long straddle in order to increase your probabilities of success with this strategy, because it is one of the lower probability of success strategies. All right, so I'll show you how to set that up on Friday, and then hey, next Tuesday I'm going to be doing this round table, if you will, of a bunch of traders talking about different aspects. You can check that out at Pro Trader Strategies. It's called the Festival of Traders. I'm going to be tweeting out some links also, so you can follow me on Twitter at Wolfman's blog. All right, that's all I got for you guys today. If you can't take that, if you can't take that, take it easy. All right.